Hello, it's Robert Miner with Dynamic Traders Group with a very special report on the dollar, euro, as well as gold, silver, and the GDX. The reason I'm doing this special report at this time is because these markets are very near some significant trend reversals or trend continuations. This video for our YouTube subscribers is an abbreviation of a much longer video that goes into much more detail on the position of these markets, as well as some real educational material that's included with those videos. So you'll see exactly why I arrive at the conclusions that I do, as well as what are the specific trade strategies to take advantage of these unique technical positions that are coming up over the next few days to a couple of weeks in each of these markets. So you can see the complete video at dynamictraders.com/Trader News Resources. And also on that page, there is a written report. It's an 11-page written report that's a summary of all the technical positions and probable outcomes for these markets that you can download from there. It's completely free. You do have to register with your email address to access Traders News and Resources, but I promise you we won't inundate you with a bunch of promotional stuff. We rarely send out email blasts unless we have something specific and unique to offer our members to our Traders News and Resources. Again, quick, easy, simple, free to get to that page. So if you like what you see here, go to that page, look at the full report, and get the written report as well. And before we continue, I just want to let you know I do actually trade. And because a good part of this report is about the euro and the dollar, and I do trade the euro on a regular basis, this year in this Robbins World Cup Championship of Forex trading, as of March 13th, I'm up 23%. Last year, I did a 70.4%, and this is futures interest and SPX 86.5%. But this is just to show you that I do trade, I do make trading decisions. So when I'm looking at a market, I'm looking at it from a very practical basis on what is a trade setup, where do you enter the market, where do you put your stop, how do you manage the trade. And I also wanted to let you know that for the next few days, just through Monday, March 18th, if you're interested in our DT reports, we're making available a 1-month trial for $29. So again, if you like what you see on this video and the more extended video that you have free access to on our website, Traders News section, check out our DT reports, because through this Monday, you can do a 1-month trial for $29, and that'll take you through the period that we're talking about in this report, where we're going to see, I believe, some major trend continuation or some reversals in the markets that we talk about. Okay, let's get started and take a look in detail at the dollar. Well, this is the dollar weekly data, and I'm recording this on Friday morning, the 15th, so the week's not quite done. We've got a few more hours of trading to finish today before this weekly bar is done, but I doubt whether there's going to be much difference from what we're showing here. What is significant, I'll kind of cut to the bottom line, and then if you want the details, you can go to the more expanded video. But what's significant is we've made several key reversal signals, major reversal signals, just this past week from a pattern that typically completes a much higher time frame pattern. So I'll just start down at the bottom of the chart. This is the weekly momentums, and this week we're going to make a dual look back weekly momentum bear reversal. That's a very reliable signal that we have probably completed or at least within a bar or two of what we call a weekly high. That's a high that's going to last for 3 to 5 weeks, if not longer. However, because this last section up from the January low is what we call ending diagonal, 5-wave ending diagonal, this section should complete the entire trend up from the February low. That's real significant because, as I explained in the extended video, how this is a corrective pattern, and how this indicates that the entire corrective pattern is complete. What follows a corrective pattern? Well, a resumption of the trend prior to the correction, usually to a new extreme. Well, that would mean that if this is correct, and if we have completed this, not just a weekly high, but what's going to be a multi-month high, the dollar should be sideways to down for many months, well into 2020, and should test and ideally exceed this February low. So that's a big trend, and we're right now in the very early stages of it, so we can participate in it with very minimal capital exposure, with the potential for very, very significant gains on the downside with the dollar. And needless to say, the euro should trend in just the opposite direction. It's set up as inversely to the dollar. So it's probably just in the very early stages of a major bull trend in the euro. Here's the dollar daily data, and while we've probably completed a major high here just last week on March 2nd, the daily momentums are dual look back, oversold, are bullish. So we're at or near what we call a daily low, which should be followed by a 3 to 5 day corrective advance. And once that is complete, then the higher time frame bear trend should continue. And I suspect, for reasons we're not going to go into in this abbreviated video, that it's going to be quite a sharp decline once we complete this corrective advance. So that's what you need to be prepared for. And again, potential, we're at the beginning, or we should begin within a day or two, a 3 to 5 day corrective rally. When that corrective rally is complete, the higher time frame, in this case, should be multi-month bear trend should resume with the potential for a fast move on the downside. Again, take a look at the full video and commentary for more of the technical position of the dollar and the euro. Let's take a quick look at gold, silver, the GDX. Well, this is gold weekly data. And about 3 weeks ago, gold made a weekly high right at some time and price targets to complete a weekly high. Happened to be right near the medium line. We call that an Andrews medium line. There were some real symmetrical price relationships right at the high, 100% alternate price projections of prior rallies. So that was a significant high, weekly high. We made a reversal as anticipated. Where are we right now, and where are we likely to be in the next 2 to 3 weeks? Well, the trend is still down. The weekly trend is bearish and should be for another 2 to 3 weeks. Weekly momentums are bearish. They haven't reached oversold. That usually implies that the trend will continue net bearish for at least another 1 or 2 weeks, up to 3 weeks, probably no more than 3 weeks. But what should follow the next weekly low? That's the question, and that's what's important. I'm going to go right up to the daily data. This is the daily data, which just yesterday made a bearish reversal right from this ideal target we had identified in advance to complete an ABC corrective high. Now we still need to decline to further to confirm that that high is complete. But when we have a bearish weekly momentums, we made a bear reversal in the daily momentums right at the end of wave C of B price target zone. That's pretty significant. We've probably completed that daily high. If not, it should be complete in the next day or two. But if that daily high, and if it's a wave B high, is complete as anticipated, is the trend should be or I should say ideally sideways to down, and keep these dates in mind, March 27th to March 28th. So if gold, silver, GDX, all three of those markets are declining into that week ending March, be the week ending March 29th, the latter part of that week, that will be an ideal time to have completed an ABC correction and a weekly low. And the ideal price would be around 1245. I'm rounding that up. That's the 100% alternate price projection of what I got labeled this wave A. So we're going to be looking around March 27th, 28th for a probable significant low, corrective low, and ideally it would be around 1245. So if we reach those two targets, and it would indicate we're completing a weekly low, which is a corrective low. What follows a correction? Resumption of the trend to new extremes, resumption of the bull trend to new extremes, meaning to above the February high. and we've got a significant price target around 14.12. I described that in more detail in the full report, which you ought to take a look at if you're interested in gold, silver, the GDX, or the euro, or the dollar, because these could be very significant trends that in the next 2 weeks before the end of March get underway. So check out the full report and the written report, because you can just print out the written report and you'll have a summary of all the technical positions and probable outcomes for all of these markets. Well, that's it for today. For our YouTube subscribers, again, take a look at the full report. I sure appreciate you taking a look at this, and I hope it's useful for you. If you like it, be sure and subscribe to our YouTube channel. Consider our DT reports. And of course, you can follow me on Twitter, where it's only every day or two I put up a chart, but it's usually pretty timely with chart and comments on that'd be at Bob at DT on Twitter. Take care. Have a fantastic week.